What's going on, guys? Just want to make a little live trade video on gold for you today to just show you my approach to trading. So overall, doing some analysis for the day, coming in, seeing that DXY is high volume bullish. It's headed up with strength. Gold is also heading bullish, which isn't great because inversely, US dollar and gold heads opposite ways. On gold, you've had a push bearish, so you've shifted from breaking a high to breaking a low on higher time frame, which means that you want to be aligning lower time frame with higher time frame to take sells. We're currently in a range. We're overextending to the upper half past 50%, obviously. So what I do is I trade in ranging conditions, either a ranging range or a trending range. I don't like high volume trending markets, like very directional. I don't fuck with that. Timing matters a lot. Trading around 15-minute intervals when smart money is going to basically enter the chat. I want to trade with volume, so I want price to immediately go in my direction. In nature, price tends to revert to the mean, so that's why I use Fibonacci and the 50% levels. I have a lot of confluences that go into my trading, so basically with each trade I have probably 10 different confluences. Each confluence is a mini strategy, and each confluence is weighted differently in probability outcome. So you've got confluences that increase the chances by a fair bit, or ones that you're just tracking that you still need to cut out that are lower probability. So what I want to be doing is trading to the midpoint of the range. We've had a big bullish push over extension to the edge, and then I'm looking for a trade back into the midpoint. A good entry model is just a high volume candle sequence into a high low. So where the 1 minute candle breaks the high and the low. And correlation is looking quite nice right now. So I'm going to go ahead and take a little sell. Okay, so we've just entered. So as you can see, also on the lower time frame, what have we done? We've went from breaking a high to breaking a low, putting the lowest time frame in our direction also to head bearish. Okay, so I'm just going to clear this up a bit. So I've shorted just here with the stop loss above the high at 38.7. Stop loss is, TP, sorry, is just in between these areas of interest. It's below this 50% pullback zone, so I'm just going to be targeting that area of interest there at 36.34. So what you can be looking at to exit a trade is the inverse of that. So if you were to go from breaking a low to then breaking a high, that would be a good exit signal. So this allows you to hold trades for longer with more confidence. As you can see, like volume's just pouring in this direction. Correcting back to that 50% of the move, as you can see, like we've pushed up extremely high volume bullish, and we've approached this recent high. Retail investors are starting to want to buy at this area as they think that price will break out and then rally up to the highs of yesterday, for example. The thing is with my trades is I'm not trying to be per se greedy. I'm just trying to take good trades that have high probability. So this could just mean going over your confluences again and just saying, hey, you know, what works? What is a good trade? How do I manage a trade? Just because a trade is going well doesn't mean that it's going to continue to go well. You know, you need to be able to have that intuition, the bias, to create a plan, but then actually follow it. It's two different things. It's a science. So you start off collecting data, and then you get to the point where you have enough data that you can finish experimenting and start doing practical allocation. So actually trying to focus on the fine details. I'm looking on the 5 second here. So you're still headed very bearish on this lower time frame, despite what people think. People get trapped in when they see even a push on a lower time frame. Price is fractal, so if we look on the 1 hour candle, price really, it hasn't pulled back that much. Like if I'm looking for 50% of this from the high to the low, then I can expect that to be around here, which is way less. Like I'm targeting way less. So I'm being very realistic with my target. Like some would also get fooled by this going, oh, it's gone to break a high, but it never broke the low. You see, like it's these little nuances that can keep you out of these shitty trades, or stop you from making shitty decisions in these trades, I should say. No trade's shit, no trade's good. It's just, it comes down to the trader. And sometimes, like, it will test your patience. Like, you could go far into profit, and then you could go into a loss again. And then you could flip again and go into profit again. Like, it's not a one-way street. This is, yeah. Trading is not built for the human mind. We're habitual creatures, so we're instinctual. We have patterns that we like to follow. And this is why you need an actual system with data to give you confidence and actually prove, hey, what's actually working, you know? Because you can try, but if you don't have clarity, you're not going to get results. One way to manage profit also is to trail with lower time frame market structure. So this is a low here, for example. Let's say you were in a higher time frame trade. Let's say you got in here, stop loss was above here, and your target was down here, the lows, okay? What you can do is when it breaks this low, you could move your stop loss from up at that high down to this high. as if price is going to push up and correct this, then it's most likely going to invalidate, and you would have been wrong on that trade anyway. So exiting early isn't a bad thing on a losing trade. So price is a push and a pull. We can't directly just bang. You need, the push, the pull, all the fun that fakes everyday people out. It's a reason that trading is such a high valuable skill. It's because very few people have the ability to execute consistently anyway. So my trades usually last from anywhere from 2 minutes to 20 minutes. So I rarely ever take trades that are over that. I like to be right, or I like to be wrong quick. Look, the thing is, you also want to have reasonable targets. If you have unreasonable targets, then you're really not going to stand a chance. You can have massive targets, but if you don't maintain the high win rate, then it's just going to inversely fuck you. So I usually like to target around 1.5 to 2R, which allows me to lose, be wrong half of the time, and still be profitable. So I think a lot of it is being able to just be patient and know what you're looking for, and then execute on that. So this isn't looking great at the moment, I'm not gonna lie, because DXY is dumping. What you would need is for DXY to break this low into break this high, retrace, and then continue through, which is quite possible, it is. And then looking for gold to continue bearish. As I was saying on the gold spread chart earlier also, yes, we are looking bullish in the way that we are very directional and headed one way. In this range, people would be buying thinking, oh, we're going to break this high. But this can just be the 50% pullback of the previous move for us to continue bearish with that overall higher time frame context being kept in mind. This is why trading around 15-minute intervals are good also, because you're trading with volume. This is a trade I've taken a bit later in the day. I've tried to force to get video content out of. Price is fractal. It does the same shit over and over and over again. Where are we pulling into 50% of this move? People would be going, oh shit, it's coming back to break even, let's get out before it hits the loss. But really, when you put it into context with higher time frame, you're up high in the range, you're taking sells in the upper half, which is a tick. You just want to see DXY really push and break this high now. That's probably if you wanted to manage this trade really good, you could say, if this doesn't break this within 5 1-minute candles, then I will exit this current trade. So management is great. Sometimes you will have DXY and gold headed in the same way, but it's not black and white. It's not a one-way street. So just because US dollar is going down does not mean gold has to go up. It's just, as I said earlier, confluences that are weighted, every confluence has a different value. And yeah, it's your ability to recognize the value of each confluence and then prioritize what works. So here you can see DXY is still looking overall very bearish. Lower time frame, however higher time frame we are in the bottom of the range, which is nice. We want to be taking buys on DXY, which means sells on gold. So we have just broken that low now. I'm going to trail my stop loss, as before it was above this high. Now I can leave it above this high, and it is basically a free ride. I'm risking 20 bucks, say, and now it either hits my stop loss and most likely continues, breaks that high, and then breaks through this high, or it comes down towards this 50% zone, hits my target profit, I get out, I go and get a feed, and I call it a good day. You know, it's just stacking probability in your favor, guys. Really, there's not an answer. That's why this shit is so impossible, because you go onto the internet to try and figure it out, look for an answer, and the only thing you'll find there are courses. People trying to make money, take advantage of you, basically. It's a cruel world, but if you do stuff for long enough, consistently enough, and you are disciplined in the way that you execute, then you can expect consistent results. It took me years to just be able to refine my trading down to one approach. I've been through probably 10 mentors. And the one thing I can say is just do not focus on outcome. You see, like, even if mentally I was focused on outcome, that trade, it come against us again. You see, we went into profit and then it come against us. Now it's actually edged my stop loss. So, like, I could have spoke too soon. It could go all the way to stop loss. But yeah, that's why you follow your rules, guys, because I don't know why it isn't executing me, but what the hell? That's trading, guys. That's trading. We hit TP, but didn't get filled. Yeah. The most important thing is just being able to identify a condition and coming with one approach to get really good at that one thing, guys. Why try and be a jack of all trades when you can be a master of one? I don't know why it isn't filling me. I'm not getting a good feeling about that, so I'm just going to close that shit. Thank you, $150. Now I'm going to enjoy the rest of my day. I hope I was able to add some value and help you guys today. It's just a bit of input from me. I'm not going to claim to be the best trader, but I've been doing this every day for 5 to 6 years, and I'm finally starting to see some consistent results. I lost a shit ton of money at the start. Everyone thought it was crazy. No one backed me, told me I was gambling. Just surround yourself with like-minded people. So the way I've been able to become so confident with not caring about outcome is by hearing it time and time again from the people that I surround myself with. They're not focused on the outcome. They're focused on good process. Regardless of the result today, if you just focus on having good rules and good process, you will inversely have a great outcome over the long term. Just get 1% better every day.